Welcome to Nasdaq Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq. Joining me is Daniel Duss, Head of Renewables Business at Adani Solar U.S.A. and PECK Board Member to discuss trends in the solar space. Daniel, it's great to have you with us. Welcome to Trade Talks.
Thanks, Jill. Great to be here.
And the world, of course, has changed a lot in 2020 between COVID-19 and the U.S. elections. How will 2020 wrap up, and what do you think that means for the solar industry in 2021?
Solar is unstoppable. We're going to grow 37% this year over last year. The utility scale solar market is basically unimpacted. Its projects being treated as critical infrastructure. So given the headwinds of global pandemic, trade wars, and other obstacles, I think a 37% is really a win for solar.
Yeah, it certainly does. And it sounds like because it is not going to be impacted so much, what does this mean for the industry overall in 2021?
I think we're going into 2021 in a really good place. Analysts expect over the next 5 years we'll install around 100 gigawatts of solar projects. That's about a 50% growth rate when compared to the last 5 years. So you see continued rapid growth within the industry. And that's being driven by technology improvements, cost reduction, driving a broader marketplace, resulting in more solar. Let's be clear, a Biden win is a win for solar. So we're very excited about that. We're expecting the Fed to really become a leader again on a go-forward basis.
Yeah, it'll certainly be great for renewable alternative sources of energy in general. So let's get into some of those details as it pertains to solar. It seems like these drivers can be broken into changes at the federal level and the state level, as well as evolution in solar technology market demand. What changes in 2021 at the federal level with Biden coming on board?
Yeah, that's a great question. So he has a lot of levers to pull when he takes control, and some of these can be done very quickly. So for example, reversing or changing the tariff structure. Solar panels right now cost 20 to 25% more than they would in other places in the world simply because of our tariff structure. Taking control of the EPA, DOE, Department of the Interior can all have significant impacts, positive impacts on the solar industry and renewables industry more broadly. So for example, making more land accessible for solar leases within BLM, or simplifying permitting processes or standardizing permitting processes for projects nationally, increasing restrictions on mercury emissions, of course, putting in place broader carbon taxation or carbon cap policies would be a huge stimulator for the industry on a go-forward basis. And we're expecting even any one of these things can be beneficial, but we're expecting a basket of these initiatives to be put in place and to have a really strong headwind or a strong tailwind going into 2021.
Now, on the state level, what changes?
So states have had leadership in this space for a long time. I think we'll continue to see that. Over a dozen states and territories have 100% renewable portfolio standards requiring 100% of the energy within those states or districts to come from renewable sources by a certain date. Hundreds of cities in the United States have adopted similar requirements. And so over a third of the United States population actually lives in a location that already has one of these requirements. And we'll see this continue to be broadly adopted in the future.
Let's go back to 2020 for a moment because it was unprecedented in so many ways. How has what we've seen changed the demand, if at all, for solar?
Yes, of course, all of these things, both legislative as well as solar, either consumer or business to business, is all driven by demand. And what we've seen is we've seen a rapid increase in demand for these products historically, and we still see that on a go-forward basis. Already 80% of folks would prefer to have more solar and renewables in the power grid. It's a true bipartisan issue with tons of bipartisan support, and we see no reason for that to do anything except continue into the future. Folks will spend more for clean products and renewable products, so businesses really see it as a competitive advantage now to be green, to use renewable energy sources, and so that's going to continue to be a paradigm shift. Historically, the largest corporates have already also have 100% renewable mandates, folks like Google, Microsoft, Amazon, etc. But now what they're doing is they're forcing and they're pushing those mandates further down into their supply chain. So instead of just the few largest companies, we now see millions of smaller and mid-sized companies being really incentivized and pushed to adopt more sustainable supply chains. So that's going to be a huge driver on a go-forward basis as well.
And Daniel, we've discussed legislation, regulation, purpose-driven consumer demand. What changes in 2021 are expected on the technology side of solar?
Yeah, so we already have a broad adoption of high efficiency panels, bifacial solar panels collecting energy from both sides of the panel. We'll see continued improvements in efficiency of panels, which is great, and will continue to drive costs down and increase energy production from these assets. And really what that does is it continues to lower the levelized cost of energy from our assets, which helps us increase the size of the available market. The International Energy Agency last month issued a report that stated that solar was already the lowest cost of energy ever on the history of Earth as a resource. And so that's remarkable. So even if we didn't do anything in terms of technology improvement versus where we are today, we already have a technology that will be more broadly adopted in the future, but we are continuing with technology advances that will further decrease cost and increase adoption. So that'll continue unabated.
And Daniel, let's wrap up here with how public markets are playing a role. Have you seen any constriction in capital markets as it relates to solar, whether on the project or corporate side?
So there is an abundance of capital available for these projects. There is an abundance of debt. Construction financing, the market can be around LIBOR plus around 1%, so extremely aggressive. Plenty of capital available for good projects. The tax equity market has seen some shifts. It's become somewhat more constrained in the current economic environment as banks have large set-asides for potentials for bad loans and other write-downs. And so that has impacted the tax equity market, but we've also seen new players continue to enter, larger corporates and others have continued to show willingness to provide tax equity to our projects, which is great. That's also an opportunity for the Biden administration to potentially institute some mechanism that allows the industry to take advantage of these tax benefits regardless of the economic situation. We saw that in 2008 coming out of that crisis. We saw a catch grant that was put in place that allowed us to monetize the same incentive through a different mechanism. So that's a real opportunity. The public markets, that's a great question. The public markets are playing a really serious role in helping support the growth of the solar industry. So PECK is a perfect example of a SPAC IPO that has gone very well, provided PECK with additional resources to continue its rapid growth, to expand nationally. We've recently seen the IPO of Array Technologies, a true success. Adani Green Energy Limited IPO'd in Mumbai exchange just 2+ years ago, and that stock is up 2,000%. So you see a huge demand for stock in these public companies, and frankly, great performance by these companies. So I think that will do nothing but continue.
Yeah, it's really interesting. As soon as we got more clarity around what's happening with Biden and how the House and Congress will be set up, that really was key. And the stocks have certainly responded, even going into the election, as it became a little bit more clear that renewables were going to get, and solar energy were going to get a little bit more support behind it, which is only a good thing, in my opinion. So is there anything else that relates to your outlook here?
No, I think you can garner that I'm very bullish on the continued future for solar. Right now, solar is less than 2% of our grid in the United States. In our lifetimes, it's going to be 30+%. That represents trillions of dollars of necessary investment. And the great thing is it's going to do nothing but lower energy costs for your average consumer, household, and business. And so really excited to see that trend continue.
All right, Daniel, thanks for joining us on Trade Talks.
Thanks, Jill. Have a great day.
You got it. And thanks for joining me. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.